Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at the gold market. So here the situation remains tricky, but in a few moments, actually on the weekend we have the big discussion concerning the gold market in its relation to the possible dynamic of the interest rates. This could become the decisive driving factor because you know the gold has the tight relation to real interest rates, which is a nominal rate minus inflation. And in the recent few weeks, as we saw, the interest rates have jumped for 30% in the United States. So it means that overall real interest rate is increased, and that has pressed on the gold market. But today, if you open the United States yields, you will see that interest rates starts dropping. So the triangle that we have discussed in the weekly report has been broken down. And rate right now is flirting around 1%. Currently, you do not see some real support to the gold market of this type of action. At the same time, you could see that the gold market, despite that has formed grabber on Thursday, so we discussed this also, here, it's not moving down with this grabber. It's going around the pattern. Currently, I suppose that with the overall massive closing position in the gold market, so recent CFTC report has shown that investors were closing not only longs but the shorts as well, so just minimizing the positions in the gold market. That could tell you just one thing, that this market is preparing for some important event and would like to minimize the risk of standing in the assets. This is from the one point of view. And the second point of view, if this will continue, and means that the sentiment could change in the market, this could become the reflection of these changes. But for that, we need more time to see. So usually it doesn't happen just within the 1 week, for example. So with the massive out of the investors in the gold on this week, it also seems reasonable that market currently shows no significant reaction even on the background of the dropping interest rates, because the major event still stands ahead. So, you know, the Fed statement, gross domestic product releases, a lot of other important statistics, not only in the United States but in Germany and France as well. All this stuff will become the cornerstone of the further price action on all markets. So markets are waiting actually for the direction, to see in what direction so will be proper way to push the markets actually. As we discussed, there's two major moments here. With the poor statistics as we expected it should be, interest rates should drop, and that suppose that existed trend and the driving factor still stands valid. What are they? This massive stimulus leads to a weaker dollar and rising of all other markets, riskier assets, including the gold, because bad statistics shows that no inflation stands in the market. Fed remains with its dovish policy, and Biden provides more stimulus. So these factors suggest for rising of the gold, at least support to the gold market. If with the poor statistics interest rates will not drop, that will be a really warning sign that could press on the gold, and it means that something stands behind this. That's what we would like to get. Meantime, in the shorter term, once market still holds above this area, so this crucial area for the bulls, as we discussed already, we will still keep on the table this possible head and shoulder special. Market is calling on the bottom of the right arm. In general, this part of the performance looks nice because market has hit yearly pivot point, pullback forming bullish reversal swing because this upper direction is greater than this one, has shown deep retracement after that. That is great, that is normal for a bullish market, and return to the big up. Appearing of the grabber, this is the bad thing that suggests the taking out of these lows, but the good thing is that market has not started dropping immediately after that, but still stands right now flat, keep chance on the possible upward continuation, depending on how the situation starts to change. In general, this flat standing after forming of the grabber, well, this is probably some points in favor of the bulls. So on the follow time frame chart, we have another minor grabber. Here has been formed. It suggests the taking out of these lows. And, well, we will see what will happen. Actually, to get strong confirmation of the bearish scenario, we need to see that market is broken for these lows. This will be important. Once market will start broken for these lows, dropping lower below the 618, it will tell you that probably bearish stands in favor, and we should be ready for taking out of these lows as well. Because by the market mechanics, guys, after reversal swing, major retracement already is done. Market has to either continue upward action here, or it means that market is bearish. So it's no choice actually. Well, and from this, with these grabbers, it just tells that market should take out of these lows, but this grabber doesn't suggest yet that market should drop below these lows. So we'll see what will happen. On the hourly chart, in general, we see the indecision situation with the forming of the triangle, and triangle appearing right around the confluence after the some pullback, the market returns back up. It also looks like more bullish sign. So currently, price mostly gives the hint on possible, well, some bullish continuation maybe, and that indirectly suggests that probably it should be some bad numbers. Second, it probably should make impact on interest rates, and actually we already see some action in advance of that. So some run into the safe haven assets. It's demand for United States treasuries. So from that standpoint, I would say that it's not everything is lost yet for gold market. So bulls still have chances to reverse situation in their favor, and upward action still could happen. So for if you would like to go short on the gold, you need to get real confirmation of that. So market has to broken for the supports that we have discussed and taken out of these lows, since below it, and that give you at least some signs that indeed market is turning down. For taking the long position, well, in this case, you could wait, for example, when the grabber will work out, because market could show some deeper retracement here, maybe fake downside breakout with the triangle, something of that sort. But you also could not wait for that and consider the possible taking position inside of the triangle. But be aware of the grabber. It means that you need to place stop somewhere below the previous lows. That could be taken by the grabber. It means below which level here? 1847, so it's below this confluence. This will be normal. It already has been tested. So that's actually what we have from the gold. Or, as we said, by the conclusion of the gold analysis in weekend, waiting for clarity, I mean getting the data, watch for reaction on interest rates, it's also could be, and this is not the mistake, this is also the scenario that you could follow. So you could choose what your mostly gravitates to. That more stands in agreement with your sentiment, with your trading style. It's very personal. So let's see how situation turns on the gold as well.